Lower by 1/4 point. The Federal Reserve lowering the Fed funds rate to a new range of 1.75% to 2%, down 25 basis points. The Fed said uncertainties about the outlook remain. The Fed will act as appropriate to sustain the expansion. The vote, 7-3, with 3 dissents, but for different reasons. The same two hawks who dissented last time, they didn't want to cut at all, Rosengren and George, Boston and Kansas City. But one dove, Jim Bullard, wanted to cut by 50 basis points. So 3 dissents. The last time we had 3 dissents was back in 2016 when there was a vote over no change, and 3 hawks didn't want to do that. They wanted to hike. Going on now, the projections show a very divided Federal Reserve. 7 FOMC members, a plurality in this case, forecast a 3rd cut this year. That is 1 more from where we are now. That would bring the rate down to 1.63%, or the average rate. But 5 members see no need for any cuts at all. They didn't even want the one today. So if everybody had a vote, and of course not all the FOMC members vote, there would have been 5 dissents from today. Well, if they voted that way. And 5 more forecast just the 1 cut this year. Put it all together, do all the math. The median is that this is it in terms of cuts. That's the median of the funds rate forecast for the Federal Reserve. That said, the plurality does see 1 more cut coming, which is 7. Does it include the chairman? We don't know. That's going to be important. Now, the Fed also lowered the interest on excess reserves at another administrative rate in order to attempt to get a hold of the Fed funds rate, which, as we've been reporting, has been trading outside of the funds rate target. Let me go through very quickly now the assessment of the economy. And if you remember what we reported last time the Fed had a statement, it's very much the same. And in fact, it's a pretty upbeat assessment. The labor market remains strong. Economic activity rising at a moderate rate. Job gains solid on average. Same stuff they said last time. Unemployment rate remained low. Household spending, they actually upgraded that to saying it's rising at a strong pace from having picked up from a year earlier. The only thing they added in terms of weakness was the idea that exports have weakened along with business fixed investment. Overall core inflation, though, running below 2%. Market-based measures, same as last time. Same assessment, really, of inflation running below 2%, but overall pretty solid economy. So 1/4 point cut, adjustment to the administrative rates, and a divided Fed as to the outlook.